Hi, thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We get into discussing what's impacting mortgage rates on a daily basis. Sometimes it could come from the geopolitical news or headline news or economic calendar. Sometimes the market sentiment changes, and now good news is now bad news. And somebody who might be on the sideline, perhaps yourself, could be confused as to why things are happening the way they are. So we try to give an explanation on a daily basis as to what's going on with the markets and hopefully help you make an informed decision because if you're following mortgage rates, you're probably looking to refinance or purchase, or perhaps you're in the business. So this will hopefully give you some information or background information as to what's going on and hopefully help you make any informed decisions that you need to make. A little bit about myself is I am a loan officer. I do work at the national lender. We do loans in all 50 states. So if you'd like to talk about refinance or purchase, please give us a shout. We're here to help you guys out. But more than that, we like to be a resource. We could be here to help you guys with any questions you might have, whether it might come from uh, running numbers or mortgage programs or mortgage rates or anything. We're here to help you guys out here. So without further ado, we'll just start off with today's economic calendar. We do got some important data to go over, and that part of it is inflationary data that is on the wholesale side of things. So typically, the PPI, which is the Producers Price Index, it doesn't get a lot of weight in the impact or weight of impact in the markets. However, because we've been so centrally focused on inflation, they are add a little more weight to it. So, without further ado, we'll start off with the headline number with its month over month. So its January number was initially came at 1%, but it was revised slightly higher to 1.2%. Forecast was calling for 0.9% February, and it came in at 0.8%. Now, when you strip out food and energy, we got what they call the core producer price indexes. Those are two variables that we cannot control, so they kind of strip those out there. So its January number was revised higher as well, from 0.8% to 1%. Forecast, forecast was showing for 0.6%. However, that only came in at 0.2%. Now, it's year over year for the forecast. This is really what we look at is the core. And its year over year went from 8.3% initial up to 8.5%. Forecast come for 8.7. However, it came in at 8.4%. So a little bit higher than the previous initial one, but lower than the revision to last month. Now, we also got New York Empire State Index, which is basically the manufacturing in the New York region. Anything above zero is, of course, expansion. So it wasn't doing too well in February, coming in at 3.1. Forecast is calling for 7, and it came in a negative 11.8. So it contracted quite a bit in the month of March. So we'll keep an eye on this as this has sharply went the other direction. So manufacturing New York region, not so good as of today. Headline news, well, of course, Ukraine-Russia thing is it's what everybody's kind of watching. We're still seeing if there's any progress. Yesterday, there were some rumors circulating that some progress on peace talks were happening, but that I think kind of is dissolved a little bit. At least the optimism has kind of dissolved a little bit today in the markets. And then there's also concerns about the new lockdowns that China is implementing to restrict COVID. They're having some more COVID outbreaks out there, so they're restricting. And of course, what that means is that we could have some more disruptions to the supply chain, furthering more inflationary concerns as well. So that's what's kind of going on there. Stock market's up today, taking its cue from what's going on there. The oil has come down quite a bit after touching about 130 barrel last week, now down to about 95, 97 today, so under $100 even. So which is good news. Hopefully, we'll see that at the gas tanks. But let's take a look at the mini mortgage, see what's going on here today. We were up earlier today about 28 basis points. A lot of lenders came out with pricing, and since then have come down. Now we're down to about -8 pricing. So a lot of lenders have come out with worse pricing. So pricing was better, and then we had some more rate changes. Basically, where it'd be almost uneven. But if this continues, we could see, of course, another price worsening coming in worse than what we had yesterday. So here's what it looks like today, the volatility. As you saw early on, we went right up. We were up at least around 28 basis points around 7 o'clock Pacific Standard Time. Then we steadily just dropped dramatically. Here's this little spot here about 7:30. We just dramatically dropped and then kind of continued dropping a little bit. Kind of came back a little bit, but just not quite enough. And then since then, right around 9:20 or so, just been kind of coming downwards again uh, over the past hour and a half or so, or a little over an hour here. So this is kind of, again, shows a little bit of the volatility that we've been kind of seeing today. And let's see here. Same thing, kind of yields. Yields were doing a little bit better. They were down a bit more. We're down to about 2.08 basically, and now we're back up and touching at 2.15 right now. Even higher than we were yesterday. So we're reaching new highs as right now. So lastly, we'll go touch on the average rate for conforming loan limits. 30 years at 4.41 and 15 years at 3.72. These two have points built into them. That's why you're not seeing them in the eighth. Usually when we quote rates, it's by an eighth. In the eighth, like 4 1/8, 4 1/4, 4 3/8, 4 1/2, stuff like that. So these are why you kind of see it in this area now. And as you can notice, rates are steadily climbing, or not steadily, they're actually sharply rising here. So we're well above 4% on the 30-year fixed right now at 4.41, approaching the 4.5. It was just, for about 2 days, I think a week or two ago, we touched under 4%, and then now we've been sharply going upwards again. All right, folks. Again, there's really no reason for it. It's just a lot of it has to do with money flowing from one over to the other. We're saying, a lot of times when there's negative territory, the stock market's up, so a lot of the investors just simply take their money out of the bond market and putting it, because they want to get greater returns, putting it into the equity market. And that's why you're seeing the stock market's doing decent today compared to the mortgage-backed securities. So you're just seeing that kind of flow leaving our markets going into the equity markets. So, all right, that's pretty much the wrap for the day. If you guys got questions, please reach out. If you guys like these videos, please help us out. Smash that like button and share. And subscribe. We'd love to see you guys keep coming, and we greatly appreciate you guys. You guys have a great rest of your day. Thanks so much for watching, and we'll see you guys tomorrow. Bye-bye.